Let's bring in Mannat Jaspal now. She's a director at the Observer Research Foundation and joins us from Dubai. Really good to have you with us, Mannat. Reports of a rift have circulated for years, but the UAE chose this moment to walk away amid a regional war and a blocked Strait of Hormuz. Is this a strategic masterstroke on their part, do you think, or a desperate break for economic sovereignty?
Thank you, Oscar. Pleasure to be here. I think it's pretty strategic in a way because I believe the Iran crisis has been a big shock for the country. And the fact that they have been attacked more than any other Gulf nation, more than even Israel, and there hasn't been very strong support for from other Gulf countries. So I think besides that, there is a very strong economic rationale. UAE has been arguing for being able to increase its production capacity. It produces about less than 30% of its potential production capacity, and that given the economic security argument, besides just energy security, the economic security argument has become very strong for the country, given about more than 75% of its GDP comes from non-oil sources. And, given the current geopolitical environment, they do want to be able to maximize the revenue potential from oil sources as well. So it's both economic, but also, of course, geopolitical.
We're seeing a clear breakdown in Gulf unity right now, with the UAE effectively reclaiming its spare capacity. Has the era of Saudi Arabia acting as the world's sole central bank of oil, so to speak, coming to an end?
Right. There will certainly be an impact on how OPEC is going to be viewed and its influence in global markets. UAE accounts for about 3% of global oil supply, and its exit will remove close to 12% of OPEC's output from coordinated control. So while the market care much less about what today's supply is, but that will impact what the future discipline will look like in terms of wider trading bans, greater episodic downward pressure on energy equities if the investors price in weaker quota compliance. So Saudi will certainly remain the only true swing producer, but its leverage will be constrained. OPEC power, many ways, comes from a collective spare capacity and their coordinated cuts, not unilateral action, right? So without the UAE, one of the few countries which has about 5 million barrel of capacity potential, Saudi will have to carry more of that burden. And if other countries follow suit, it looks like stabilization in the oil markets will become more problematic and, least to say, more expensive and less credible and certainly harder to sustain.
We also know Donald Trump has long called OPEC a monopoly, and now one of its most reliable pillars is gone. Does the cartel still have the teeth to manage global prices, or are we witnessing the beginning of perhaps a permanent collapse in its influence?
Right. Well, you're right. I mean, I think one person who will certainly be very pleased from this would be Trump, because he has been, pushing for increase in production and falling, falling prices as a consequence. Having said that, it's difficult to sort of anticipate at this point, because even if UAE wants to increase production till the time shipments don't go in, it's difficult to be able to understand and assess its overall impact. It's too early to say. I believe in the short term, the impact would be very muted, given the country cannot ramp up production in the short term. Plus, there are global shortages because of of course, clearly the waterway being constrained, but also damage to infrastructure in other Gulf countries as well, or other, Arabian Gulf countries, I would say, and storage constraints adding to that problem. So I believe in the short term, the impact will be more muted, but we have to see how once the strait opens, how the markets truly react in terms of future pricing and how investors really react to that risk premium that will be included and considered in many of these financial adjustments.
Yes, certainly uncertain times now. Mannat Jaspal, great to get your analysis. Thank you.